Okay, so you've given us a whole bunch of stuff about comparing quantities,
Yeah.
ratios, percentages. We've even got some stuff about discounts and even interest.
Yeah.
It's a lot to take in. And, we're calling this episode our deep dive.
Right.
And we're going to break down everything, really try to pull out the useful stuff, stuff that'll help you in everyday life, not just like, textbook stuff, but stuff that will make you feel more comfortable dealing with the numbers.
Absolutely. And I think what's so interesting is we've got all these different sources, and it shows just how connected these different ideas are: ratios, percentages, discounts, taxes, interest. It's just different ways of looking at relationships between numbers, how those relationships change. And once you see the connections, it can really be like, okay.
So the first thing we're going to talk about is the basics of comparison, right? Ratios and percentages.
Yeah.
And one of the sources starts off with a pretty classic example, a fruit basket. You got 20 apples and 5 oranges.
Okay.
Classic fruit basket example.
Yeah.
And it points out that the ratio of oranges to apples is 5.3u, which basically simplifies down to 1.4.
Great.
Meaning for every 1 orange, you have 4 apples.
Exactly. And that's really what a ratio is, right? It's a direct comparison of two quantities.
Yeah.
And the source also points out you can actually express that as a fraction, too.
Right.
5 oranges compared to 20 apples, that's 5 over 20.
Right.
Which, just like you said, simplifies to 14, which means the number of oranges is 14, the number of apples. But remember, order matters. The ratio of apples to oranges would be 20.5 or 4.1.
Right. Totally different picture. Totally.
Yeah.
Okay, so then the source goes on to percentages. You see those everywhere. And it explains that percentages, really, it's another way to compare quantities, but this time it's out of 100.
Yeah.
So sticking with that fruit basket, we've got 5 oranges out of a total of 25 fruits.
Right.
So to find the percentage of oranges, you can take 5 over 25, that equals 0.20. Then you multiply by 100%, and that lands you at 20%. So 20% of that basket are oranges.
Precisely. And the good thing about percentages, right? They always use that base of 100, so it's really easy to compare like proportions across different situations, even if the totals are different.
Right.
The source also mentions something called the unitary method.
Oh, yeah.
Which is kind of a pretty intuitive way to think about percentages. It's basically like, okay, if we have 25 fruits, that gives us 5 oranges. How many would we have if we had 100? Right? So you first figure out how many oranges you have per one fruit. That'd be 5 divided by 25. And then you multiply that by 100. So you'd get to that same 20%. And in this case, right, since we're just talking apples and oranges, if 20% are oranges, well, then the remaining 80% must be the apples.
Yeah, that makes sense.
Gives you that complete breakdown.
Right. So we've got these basics of comparison down. Now let's see how these ideas work in the real world. And one of the sources talks about a Class 7 picnic planning problem.
Okay.
Which always seems to involve math, right?
They always
They always do.
It's a really good example, though, because it ties together the ratios, the percentages, with just some basic arithmetic in a way that most of us can kind of, picture.
Right.
So the first part of the problem asks us to figure out the ratio of girls to boys. And we're told that 60% of the students are girls, and there are 18 girls in total.
Okay.
Now, we see 2 different approaches to this problem. Shima, she's using a little algebra.
Okay.
She's thinking of the total number of students as X, and, she figures that 60% of X equals 18.
Right.
So solving for X, she finds that there's a total of 30 students.
Yeah.
Then you just subtract the 18 girls, and you're left with 12 boys.
Right.
Leaving you with a ratio of 18.12, which, once again, simplifies down to 3.2. So that means for every 3 girls, there are 2 boys.
Yeah. And then John, on the other hand, he uses that unitary method. Remember, we talked about that. And he reasons, okay, if 60 out of every 100 students are girls, then having 18 girls must represent a total of 100 divided by 60 multiplied by 18. Right.
Which, surprise, surprise, also gives you 30 students.
Yes.
And then he just follows those same steps as Ashima to get to that 12 boys and that 3.2 ratio. And I think it's just so fascinating how, different people can take different logical approaches.
Totally.
And still arrive at that same correct answer.
Absolutely. Okay, so the next part of this picnic problem is figuring out the cost per student. We are told that the picnic site is 55 kilometers away, which makes for a 110-kilometer round trip. And that costs €12 per kilometer, so that's a total of $1,320 just for transportation.
Okay.
Then we add the cost of refreshments, which is $4,280. So all in, our total expenses are $5,650 tetrons.
Okay.
Now here's the thing. There are 2 teachers going on this picnic.
Oh, right. Right.
Can't forget them.
Yeah, got to feed the teachers.
So our total number of people isn't just the students.
Right.
You've got the 18 girls, 12 boys, plus the 2 teachers,
Yep.
total of 32 people.
And that's so important, right? Like when you're doing these calculations, like per person costs, make sure you account for everyone.
Absolutely.
So we're at 32 people.
32 people. So you take the total expenses, 5,600,
Yeah.
divide that by the total number of people, 32, and you land at a cost of 175 per person.
And again, you could use that unitary method.
Oh, yeah, totally.
If 5,600 covers 32 people, then the cost for one person is 5,600 divided by 32.
Yep.
Right. Same answer.
Okay, so last bit of the picnic problem. We're told that the group makes their first stop 22 kilometers from the school.
Okay.
And we know the total journey is 55 kilometers.
Right.
So the question is, what percentage of the total distance has the group covered? And how much further do they have to go?
Right. So Ashima tackles this by just directly calculating the percentage. Distance covered, 22 kilometers, divided by the total distance, 55 kilometers.
Yeah.
And then multiply by 100%, which gives you 40%.
Right.
Now, John, he's sticking to his unitary method, and he's thinking, okay, if 55 kilometers represents 100% of the journey, then 1 kilometer represents, 100 divided by 55%. So 22 kilometers represents 100 over 55 multiplied by 22, which again gives you 40%.
Right. So they've covered 40%.
40%, which obviously means the remaining 60%, you just do 100% minus 40%, is still left to go.
Perfect. Okay, so moving on from picnics.
All right, what's next?
Let's talk about something that I think probably all of us can relate to. Shopping and discounts.
Ah, yes. Who doesn't love a good sale?
I know, right? And, the source defines a discount pretty simply. It's a reduction in the marked price of an item.
Makes sense.
And the formula is simple. Discount equals the marked price minus the sale price.
Right. So it's just that difference between what the price tag says and what you actually end up paying.
Exactly.
Now, a lot of times people will represent that discount as a percentage to really understand the magnitude of the savings.
Right.
So there's an example given of an item that's marked at 840 and it ends up selling for 714. Okay, first you figure out how much was actually discounted, right? So it's 840 minus 714, which is 126. Then, to get that discount percentage, you take that discount amount, 126, divide that by the original market price. Remember, it's based on that original price, made it 840, and then you multiply that by 100%.
Right.
So 126 over 840 times 100% gives you 15%.
Nice.
So in this example, you're getting a whole 15% off the original price.
Yeah, not bad. Not bad. Okay, so then the source gives another really common scenario. You've got a frock. It's listed at $220, and there's a 20% discount.
All right.
So we've got to figure out what the actual discount amount is, and then what that final sale price will be.
Yeah. So they show that 20% discount on 220. That's calculated by 20 over 100, multiplied by 220.
Right.
Which gives you 44. So to find the sale price, you just subtract that discount from the original price. So 220 minus 44 gives you a sale price of 176. Now, what's interesting, Rahana actually uses that unitary method again here, but this time to directly get to that sale price.
Oh.
So she reasons, okay, if there's a 20% discount on, let's say, a marked price of 100, then that means the sale price is 80, 100 minus 20.
Yeah.
So then she applies that to the 220. So the sale price would be 80 over 100 multiplied by 220.
Right.
And boom, that gets you to that same euro and 76. It's just a slightly different way to think about it, especially if you're really just interested in that final price and not so much the actual discount amount. It's another example, right? There's not always one right way to approach these things.
Totally.
Do what makes sense in your head.
Exactly. Now, one of the sources also talks about how you can actually estimate percentages, to do quick calculations in your head.
Oh, yeah. That's so useful.
Yeah, it is. So let's say you get a bill. It's $577.80.
Yeah.
And there's a 15% discount.
Yeah.
Now, you could just round up to 580 to make it easier.
Makes sense.
Then you could just find 10% of euro, 580, which is 58. Then half of that, 229, would be like approximately 5%. You add those together, 58 and 29, you get 87.
Yeah.
Pretty good estimate of the discount.
Yeah, that's a really useful skill, like when you're just out and about shopping.
Yeah.
And you want to quickly figure out, does that sale price make sense without having to pull out a calculator,
Totally.
You don't want to be whipping out a calculator in the middle of the store.
Exactly.
It's just about developing that number sense, like getting comfortable with thinking about approximate values, It's so valuable in everyday life.
Absolutely. Okay, so now that we've saved some money with discounts, let's talk about the things that add to our costs.
Right, right. You have to pay the man.
So the source mentions a few: sales tax, VAT, and GST.
Mm-hmm.
So sales tax, or ST, is basically a government charge, right?
Yeah.
And it's added to the selling price.
Uh-huh.
It's collected by the shopkeeper, when you buy something,
Right.
and then they pass it on to the government.
Right.
Then there's something called value-added tax, or VAT.
Yeah.
That's often included in the price that you see.
Yeah, that's the tricky one sometimes. It's like, is that in there? Is it not?
Exactly. And then finally, we have in India, since July 1st, 2017, the Goods and Services Tax, or GST,
Right, GST.
which is like a more unified tax system. It covers both goods and services.
So, I mean, it's important to understand that these are all what we call like consumption taxes, right?
Mm-hmm.
They get charged when you buy something.
Mm-hmm.
And historically, the main difference you might have noticed is that VAT is often kind of baked into the price tag,
Yeah.
whereas sales tax is typically added at checkout.
Right.
GST was really meant to kind of streamline that and make it more consistent across the country.
Right. Okay, so one of the sources gives a pretty straightforward example for sales tax. You're buying roller skates, they cost $450, and there's a 5% sales tax. So to calculate the tax amount, you just find 5% of $450, which works out to 22.50. So the final price you'd pay, it's that original price, $450, plus the tax, 22.50,
Mm-hmm.
which comes out to $472.50.
Yeah, pretty straightforward.
Now, what happens when the price you see already includes the tax?
Yeah, that's where it gets a little tricky.
So the example given for VAT is you buy an air cooler for $3,300, and that price already includes 10% VAT.
Okay.
So to figure out the original price before VAT, you have to think about that original price as being 100%, right?
Right.
So if you add on a 10% VAT, that means the $3,300 that you paid represents 110% of that original price.
Right.
So to find that original 100%, you can set up a ratio. Original price over 100 equals 3,300 over 110.
Right, yeah.
And solving for that original price, you get 100 over 110 multiplied by 3,300, which equals 3,000. So the original price of the air cooler was 3,000, and a 300 was the VAT.
Yeah, and it's the same kind of calculation for GST, right?
Yep.
Like, in this case, we have an example where you buy something for $784, and that includes 12% GST.
Okay.
So if we assume the original price is 100%,
Mm-hmm.
then adding that 12% GST, the final price, the 784, that represents 112% of the original,
Right.
right? So to find that original 100%, you do 100 over 112 multiplied by 784, and that gives you 700 prime.
Yeah. So the key takeaway is understanding whether that percentage is being added to a price
Yes.
or if it's already part of the final price.
Exactly. It comes down to, like, what is that base value? What is the percentage actually being applied to?
Okay, so we've done comparisons, discounts, extra costs.
It covered a lot.
Now let's move on to the world of interest.
Oh, yeah.
Specifically compound interest, which is often described as, the magic of money growing on itself.
I like magic.
Right. So one of the sources starts off by reminding us about simple interest with this example. You borrow $10,000 at an interest rate of 15% per year for 2 years. So the interest for 1 year is 15 over 100 multiplied by 10,000, which comes out to 1,500. So for 2 years, the total simple interest you would pay, it would be 1,500 multiplied by 2, giving you 3,000.
Yeah.
And the total amount you'd repay is 13,000.
Right. So with simple interest, it's always calculated on that initial principal amount. That's the key difference.
Mm-hmm.
So it stays the same. Now, compound interest is where it gets a little more exciting, let's say.
Yeah.
Your source uses Hina's example. So Hina borrows $20,000 for 2 years at an interest rate of 8%, compounded annually. So for that first year, the interest is 8 over 100 multiplied by 20,000, which comes out to 1,600.
Okay.
So at the end of the year, the total amount she owes is 21,600. So 20,000 plus the 1,600 interest.
Right.
Now, here's where the compound part comes in. For the second year, the interest is not calculated on that original 20,000.
Mm-hmm.
It's calculated on that new amount.
Yeah.
21,600.
Okay.
Right. So the interest for the second year, it's 8 over 100 multiplied by 21,600, which is €17.28.
Okay.
So the final amount she owes after 2 years is 21,600 plus that €17.28, giving you a grand total of 23,328. So in total, she's paid 328 in compound interest.
Now, the source does a really good job of explaining the difference between simple and compound interest using under euro invested at 10% annually for 3 years. So with simple interest, you earn, 10 every year.
Yeah.
So after 3 years, you've earned 30 and your total is 130.
Right.
But with compound interest, that 10 you earn in the first year, that gets added to the principal.
Yes.
So the second year, you're earning interest on 110, and the third year, you're earning interest on 121.
Yeah, that's the magic.
So you end up with a total compound interest of 33.10 and a final amount of 133.10.
Even though it starts small, as those amounts get bigger and as the time goes on, that difference can be huge.
Yeah.
It's the power of earning interest on your interest.
It is.
That's what gets people excited.
Absolutely.
So this source goes on to introduce this really handy formula for calculating compound interest directly without having to do it step by step.
Oh, yeah, yeah.
Right. So it's A equals P times 1 plus R over 100 all to the power of N.
Mm-hmm.
So A is that final amount, P is the initial principal, R is the annual interest rate, and N is the number of years.
Yeah.
And this formula is great, especially if you're dealing with longer investment or loan periods.
Great, right. So they give an example of how to use that formula. We need to calculate the compound interest on $12,600 for 2 years at a 10% annual rate, compounded annually.
Okay.
So you plug in those values, you get A equals 12,600 times 1 plus 10 over 100 to the power of 2, which simplifies down to 12,600 times 1.1 squared, which gives you 15,246. So to find the actual compound interest earned, you subtract the original principal. So 15,246 minus 12,600 gives you 2,646.
Yes, so much faster than doing it year by year, right?
It is.
So that formula just lets you jump right to the final amount. And like the material says, once you have that final amount, the A, you can just subtract the initial principal, the P, to get that total compound interest.
Okay, now what's super interesting is that the source mentions that this compound interest formula, you can actually use it for way more than just money.
Oh, yeah.
It's not just for finances.
Right.
It can be used for anything where there's a consistent rate of increase or decrease over time, like population growth or the multiplication of bacteria, even like increase or decrease in the value of assets.
It's really cool. It shows you how versatile this concept is, right?
Yeah.
Like you can use that same mathematical tool and apply it in all these different situations.
So the example given is a city's population grew from 20,000 in 1997 at a rate of 5% per year.
Okay.
Now, we need to figure out the population at the end of the year 2000. So that's a period of 3 years.
Right.
And we can just use that same compound interest formula. We just have to substitute, rate of population increase for the interest rate and initial population for the principal.
Right. Exactly.
So the population in 2000 equals 20,000 multiplied by 1 plus 5 over 100 to the power of 3.
Yep.
And the source shows us 2 ways to do it, step by step, year by year.
Mm.
And then you can also just directly use the formula.
It's good to see it both ways, right?
Yes.
See how it all works.
And both ways, you get a population at the end of 2000 of about 23,153 people.
Wow.
And on the flip side of growth, you can also adapt the formula to calculate depreciation.
Right.
Which is, like the decrease in value of something over time.
Yeah. Like a car or, electronics, anything that kind of loses value over time because of wear and tear or just becoming outdated.
Exactly. So the example given is a TV. You bought it for $21,007 and it depreciates at 5% per year. So in this case, instead of adding the rate in the formula, you subtract it.
Right.
So it becomes 1 minus R over 100.
Mm-hmm.
So the value of the TV after 1 year would be $21,000 multiplied by 1 minus 5 over 100, which is 21,000 times 0.95, giving you 19,950.
It's same math, right?
Yeah.
Just that instead of increasing, the value is decreasing.
So as we wrap up this deep dive, I think we've covered a lot. Ratios, percentages, discounts, taxes, and even compound interest.
Yeah, we've been through a lot.
And, it's so cool to see how ratios and percentages give you this power to compare quantities, understand proportions.
Absolutely.
Discounts. It's all about saving money, right? Getting a better deal. But then you've got those extra costs like sales tax and GST, which add to the final price. And then compound interest. It's fascinating, right? It's like the snowball effect.
Yeah.
It can lead to some pretty significant growth over time.
And I think what's so empowering is that these are not just abstract ideas, right?
Mm-hmm.
These are tools that you can use every single day.
Totally.
Whether you're checking out a sale, trying to figure out your taxes, or just, thinking about your finances for the future.
Yeah.
these concepts, they give you a framework to think critically about all those numbers you encounter, right?
Yeah.
So it's not just about like crunching numbers.
Mm-hmm.
It's about understanding like the forces that are shaping our lives,
Oh, absolutely. So here's something to think about. How much are these ideas, ratios, percentages, discounts, taxes, and compound interest? How much are they really woven into the fabric of, like, our financial and economic world? Think about your own life, your spending habits, your savings, even just how you assess if something is a good deal. How could understanding these principles better lead to new insights, maybe help you make better choices? It's not just about the numbers themselves, it's about understanding the power they have.
Well said.
And that's it for this deep dive. See you next time.